Adobe reported fiscal year 2023 second quarter earnings results. So in this video, I'm going to provide a review of those results, provide a big picture analysis of Adobe's latest earnings results. I'm also going to answer if Adobe stock is still a buy. Remember, going into these earnings announcements, I had Adobe stock rated as one of my top stocks to buy for 2023. I put that in that category in January. So I'm going to update that recommendation. You're not going to want to miss that. So stay tuned and let's get started with the earnings overview. So Adobe's revenue in the most recent quarter increased by 10% to 4.82 billion. Earnings per share also increased to $2.82 from $2.49 in the same quarter the prior year. The impressive thing about Adobe is that it boasts 15.22 billion in RPO, remaining performance obligations. Adobe sells many of its products as subscriptions, and so it can't recognize that sale as revenue until it fulfills that obligation. So if people buy an annual subscription to Adobe's Creative Cloud, Adobe bills them monthly even if they pay it all up front. So Adobe can't recognize it as revenue until all of that service is completed. So 1 month of revenue in January, 1 month in February, and so on and so on. So it breaks it down into 12 parts and takes revenue that way. That's how this $15 billion in RPO eventually will turn into revenue as Adobe fulfills the requirements embedded in those obligations. The big picture, the big thing in Adobe's quarter was how it highlighted how generative AI will likely make creators using Adobe more productive and thereby increasing demand for its product suite. Now, I've used Adobe's products before, and one of the things about Adobe's products, impressive as they may be, is that they are difficult to learn. All of the enhancements, all of the features, they're difficult to learn. But if they can embed artificial intelligence, large language models within their productivity suite, within their creative suite, then that can make the products easier to use. You don't need to learn as much of the tricks and the codes and all of that that goes with its creative suite. So that's something that's going to be a tailwind for Adobe going forward. Cash flow from operations increased to 2.14 billion. That was up from 2.04 billion year over year. Adobe spent $1 billion buying back its shares in the second quarter, and it still has $4 billion left on its buyback authorization. I always say I like to see a company buying back its shares. It tells me that management thinks its stock is undervalued. Adobe's forecasting revenue of 4.85 billion in the third quarter and earnings per share of $2.85. So incremental increases in both the top line and the bottom line for Adobe in the next quarter. Now, as to my recommendation on Adobe stock was one of my top stocks to buy to begin the year, and I'm reiterating that recommendation after these earnings results. Adobe stock is still one of my top stocks to buy right now. So investors, if you're interested in Adobe stock, I think it's a great stock to buy right now. It's already up significantly for the year, but I think it still has room to go. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.